Welcome back, traders. My name is Manuel Fonseca. Welcome to Smart Habits. In today's video, we're gonna see examples of how to identify a range in a bullish trend. We're gonna make examples of strong low, the break of structure, and you're gonna see some of the concepts we have already talked in a previous video in which I explained the theory. If you haven't seen the video about the theory of how to identify a range, I'm gonna let it in the comment box so you can see the video, right? Also, I will explain it here in the video, some examples in different pairs, and this is all. So let's go to the class. Perfect, guys. So before we start seeing the examples, let's see briefly the theory, how it works, and let's see the basic concepts that we need to understand in order to identify a bullish trend. So we have to identify the range beginning and the range ending. How it will work? It will work with the theory I explained in the video of the strong highs and strong lows. In this case, we're just gonna see. First of all, we're gonna identify the liquidity here. This is a liquidity SIP which is already taken here. So once we spot this, after the liquidity is taken, so the lows are broken. It could be with a body of the candle or the candle wick, and then we see this a break of structure, right, with the body of the candle. Then is when we have, this is the beginning of a range. Okay, remember that I told you the theory that the swing low is created, then the swing high, and from the swing high the liquidity is taken, right? And then from this new low we see, or we wait for a break of structure with a body of a candle. Now this lower low will become our strong low. What is the meaning of this? That if we are in a bullish trend, this low will be highly respected by the price because we are in a bullish trend, right? So this low will be highly respected, okay? And this will be considered a range beginning, okay? This will be considered a range beginning. Now, the end of a range will be mostly or practically the same, but of course backwards. It means like we will wait for the price to make the next, which is a high. This could be a normal high, and then we will wait for a swing low. Then from the swing low, the liquidity is taken right here. And this liquidity, after the liquidity taken, we will wait for a break of structure of the swing low, which means this, or the closest low, let's say. So this low, when the price get to this point, there is still not ending of a range because the price could keep pushing up and make higher highs, right? But after we saw this, which is the break of structure with a body of the candle, then we determine that this is or range ending, correct? Now we have here the boss, break of structure, and this will be a clear example of a bullish range, okay? And why, for what do we need to identify a correct range? It's because with this, we'll be able to work and find possible setups, okay? That's it. And this high that is here becomes our weak high, which means that the price is likely to break because we're in a bullish trend, right? This is it. Today's class will be based on finding examples of a correct beginning of a range, okay, strong highs, strong lows, examples mostly, and identify the ending of the range. After that, we can see probably a certain reaction in the price and how we can see a very clear continuation of a pattern, right? But let's do this example right now. I'm gonna take as an example the GBP/USD. This theory works with in any time frame. It could be 1 minute, 5 minutes, 15 minutes, 1 hour, daily, weekly. In all the time frames works because remember the price works in fractals, right? It means that the price will always do the same kind of patterns in different time frames, and with that, we just need to be aware of how it works, okay? So in this example, as you can see, it's totally bearish. So we can find here in the current price bullish examples. Let's try to find some bullish examples here. let's change the market. I mean, I always look examples in the GBP/USD, but let's find in the New Zealand dollar the versus the Japanese yen. It's a good example. Yeah, this is completely bearish. What currently is sorry, this is completely bullish, but this is bearish. Okay, so let's see. Let's go for the very beginning. This is extremely evident. My piece of advice in order for you to find correct examples of bullish ranges is that go for the very evident ones, and then we have our exercise after that is trying to identify the end of the range. Then we have to find a beginning of a range, the end of the range, beginning and until the impulse is finished, right? So look at the next. This this is a very evident bullish impulse, but if you work with the or you play, let's say, with the time frames, you can say that this could be all of this from this to here. This could be probably would be a weekly or a monthly impulse, and this is a retracement in a monthly time frame. So our work as a professional traders is just to find the continuation of this bullish range until it gets to the zone, monthly, weekly, whatever, and then spot the next reaction, right? That's why the price is called fractal. Okay. Now let's see. Let's find these examples. So of course, this low will be our strong low, very evident. This is the lowest low in the market. Perfect. Now we just have to find our liquidity taken. So remember that we will find the closest low, which will be this one, right? And then we're gonna try to find out the liquidity sweep. So we see the string low is created, which is this one, and then we will find the closest high, which is this one right here. From this, we're gonna trace this line, which for the moment, in this, for example, with this break of this high with this candle wick, it's not considered a break of structure because it's just a liquidity taking. So it's just taking the people who are selling here. But then we wait for a moment and then we see this, a break of structure with a body of the candle. So now we could determine that this is a proper boss, break of structure. This, of course, is the liquidity taken, right? Or the liquidity sweep. And this low will become this low will become our strong low. It means that this low will be likely respected until the change of the trend. Okay. So now our job is to find the end of the range. So we will find the same pattern, right? The same pattern, but backwards. Okay. So remember, we will look for the liquidity of the high has been taken, and then a break of a structure with a body of the candle, and then at least push down and to keep pushing up, right? This will be the end of a range. Okay. And this is where we're going to look. Now, let's try to find the most evident ones. So we will find, for example, we could take in consideration this high because it's one of the most relevant, at least in this part of the market, right? And what we're going to do now is just trying to find if this wick high, okay, actually is the end of a range. How? Remember, we're going to look back to the closest high in this case. That is this one, right? Okay, so definitely here is a liquidity taken, but after that we will wait here for a bust or break of structure of the closest low, which is this one. Is this broken? No. So this cannot be considered a range ending, correct? This is not considered a range ending. All right, so let's keep moving up. Now let's see the next high. So this could be considered. No, definitely no. If you see it's not clear, we need to spot I mean, the clearer the pattern, the better. Why? Because with that clarity, we will be able to understand where is the liquidity and where are the order blocks that works for us. Okay, when you start combining the concepts. Okay, so this high won't work definitely. For example, the most evident one is this one. So let's try to analyze this one. If this made a range ending. So, okay, now we find this high. Let's look to the closest high right here, which could be this one here. Okay, so the liquidity is of course made. We can see here the liquidity sweep, right? And then the closest high, closest low, which is this one here. If we see there is a boss, perfect. There is a break of structure. So we could say that from this low to this high is our range. Okay, this is our complete range. Now, you would ask me, hey Manuel, but look, the price make the boss, but it did not keep pushing down, right? Like going down. The answer is simple, guys. It happens in the price because sometimes, for example, this reaction here could be in a weekly order block or a monthly order block. And those order blocks move the price in a really huge waves, right? So those waves, and what we're currently analyzing is a wave, that's it, or a really huge impulse, right? Now, look at the next. You would say, Manuel, but this low, strong low, is actually very far from the current price we're analyzing here. So why are you teaching us this? You know, like the range beginning and the range ending? Because once we spot this, which is the ending of a range, which is this, and we find this scenario which is broken, right, or is not validated or is not respected by the price, now we can, let's say, update or strong low. Why? Because in the theory of the smart money concepts, at range, let's imagine this bullish range, right? Sorry, it's not as beautiful I used to draw them. Okay, so this bullish range, okay, we're gonna work with it we're gonna work with it from this to this. Okay, like we're gonna work with it from this with all the information it provides us here. But if the price decides to, I don't know, for example, goes down, reacting in an order block and keep pushing up, and now breaks or ending of a range, it means that we have to update our range beginning. And this will be our range beginning, right? How? Let's see. That's why this class is made for, right? To explain how to update, for example, in this example, in this case, the new ranges. So this is considered the end of a range, right? But once the price break it with a body of the candle, this weak high, of course, becomes a break of structure. This low, this closest low, not this one. No. This one, when we have the pattern liquidity taken, and then we have a break of structure, which will be this one, right? This will be the original boss, original break of structure. After we have this liquidity taken and then a boss break of structure, this will be considered our new strong low. Okay, this will be considered our new strong low. And this is how we keep updating our strong lows. So you would say, Manuel, so in a bullish trend like this example, you can have multiple strong lows. Yes, let's say that in the technical answer will be yes, but you just consider the closest to the current price, because you cannot work with this one. It's actually very far, and there is a lot of information you could be missing. So you just have to keep updating your price and your range constantly. All right. Now, this is actually very interesting. When you see this here, where okay, wait. Do you remember? Do you remember this? This evident high we saw here. This break of structure here. That we said, okay, look, he was on liquidity taking, perfect, but there was no boss, which was not there, right? What happened? If you remember the theory about the order blocks, you can say, or you can tell that this is an order block, right? Now look how interesting it works, or how the price works. Since the price did not break the structure of this low, yes, it entered to this bullish order block, had a reaction, and then made this high of that moment be broken, right? Now we may consider this one, this low, as a strong low, yes, for a concept that is called order flow, right? And it's a concept I will explain to you, especially in the advanced learners, right? Because this is a range class, which is we're just seeing concepts that are, let's say, not basic, but at least the first or the fundamental core concepts. You can see that here is a follow order flow, which means an order block is mitigated, and then you create another order block, and here the reaction in this order block pushes the price up, right? And this will be considered a strong low in this example, right? It's a little bit more advanced, but this is for the advanced learners who are watching this video to also understand why we didn't take this as a strong low, right? Perfect. But now let's keep with the current price. Now here it is the strong low, definitely break of structure, and now we're gonna do the same exercise. We're gonna try to find a range ending. So we're gonna see, for example, this is the closest high, let's say, working with this definitely. Let me do the next example so you can see it better. All right, so if doing this exercise with the reply bar, this is the current price is showing us this. Okay, we cannot determine anything. To find a break of to find a ending of a range, we will wait here for a liquidity taken, which is already made here, and then we will wait here for a break of a structure of this low, right? But let's see what happens with the price. The price keep pushing up, so we just update. This could be our liquidity taken, and this low could be or possible breaker structure. Let's see. The price keep pushing up, right? So now this liquidity taking right here, it's what we consider the liquidity taking, and probably this low here could be considered our boss break of structure. But I want to ask you a question. Is this a real break of structure? Is this a real break of structure? Remember I mentioned that it will be with the body of a candle. Since this is just candle wicks, it means that the price is still showing signs of keeping bullish, all right? But we're gonna keep waiting and see if it breaks this high. All right, it didn't. All right, it didn't. So look, this will be considered or break of structure. Definitely yes. Okay, boss break of structure, right? And now this will consider or weak high. All of them are weak highs, but this is like the one which we like determines the end of the range. And look how curious the price is. Weak high. After the break of structure, the price reacted in a what? In an order block, right? In an order block, which is this one right here. So because it reacted to the order block, it is likely to keep pushing up, right? Let's see. Yep, it did it. This is a gap. This is a gap. But if you just have to count this as a normal candle, it's just a normal candle right here. Yes, that's a candle. and it was broken with the body of the candle. So now what we have to do, update our strong low. Now the same exercise. Of course, this is the very evident low. This is a very evident low. And we're gonna find out if this follows our pattern of confirmation, right? So liquidity taken, yeah, that's right. Look, this was the lowest low, but of course we can take into consideration this low. I mentioned this one because it's the lowest one, and also took the liquidity of this one, right? And now we're gonna find out the closest high, which is this high, this one right here, and this will be our boss or break of structure. And then once we have this break of structure, we can determine that this is a range beginning, right? The beginning of a range. And that's it. So now this high that is here will be considered our weak high. Because this is a bullish trend, if I see the market like is showing in this moment, I will wait for the price to do two things: go to an order block or an imbalance in those areas here, or even this one, for example. I keep pushing up, right? Because that's what we have to keep thinking. Bullish trend, it will mitigate all the highs that are close to the price. Okay, let's see if that happens. All right. No, all right, perfect. Now we can see the next. Once the price, that was what we were expecting to do, right? And you say, okay, Manuel, so if we have put an order here, we will be able to lose that order. Definitely, yes. That's the risk you have for being a trader. Definitely. But now this is the other thing I would like to show you, and now you already know it. Now we are showing or seeing, right? You can see in this moment a change of trend, right? Or a market shift. This would be a market shift. It means that once we got this 1 hour range, right, with the full confirmations right here, and the strong low was not respected, and it was broken with a body of a candle, now we could say that the trend line has changed to what? To a bearish trend. Now we have analyzed all these bullish trends, right? Examples, right? And now the price has done a change of a bullish trend change or market shift. Okay, right. So I'm gonna stop the video here. But now this is what you're gonna have to do. You just need to find out in the market at least, listen to me, at least 10 to 30 examples of the beginning and an ending of a range, right? If you want me to check those, write in the comment. Look, Manuel, just find out this range beginning. Is this correct? Put it there in the YouTube comment box. I can open it, and then I can make a video analyzing what if these are good beginnings or not, because there are some questions that will raise up. When you start practicing this theory or this strategy, there is where the questions will arrive, because you will say, hey, if the break of a structure is just with the candle wick, will be possible to count it as a range beginning? You already know the answer. It's not, right? But because you're just making your own process of learning, then it's when your own questions will show up. And remember that this is a personal process. Trading is not taught at schools. Not all the schools, right? There's really specific elite schools that teaches this with really professional teachers and all the stuff. But in this case, we're just making this information public for all of you, right? Now, when I'm gonna make a video explaining the range ending and beginnings, but in a bearish trend example. And I want you first to do the examples with a bullish trend, right? Now, if you find this video interesting, share it with some friends and try to practice this. You can write me and follow me on my different social media. And if you have further questions, don't doubt and ask me. I will be there to help you, okay? I hope you have enjoyed this class, guys. This is just practice, theory and practice, and then production. Produce your own results, okay? Thank you so much for coming and see this video, and see you in the next video. Bye bye, my friends.